guys, it's Stock Curry. In today's video, we're going to go over why the markets were down over 2% today. I'm going to go over all of the news and lay it out very clearly for you. I've also want to talk about a few stocks that were actually up today. So let's get into it. Okay, first of all, the markets were down a lot today, with the S&P down over 2%, the Dow Jones down over 1%, and the Nasdaq down almost 3%. So why did the markets crash today? Well, there's a lot going on. First of all, Janet Yellen, the Treasury Secretary, told lawmakers that the United States would run out of money by October 18th. Now, October 18th is less than 3 weeks away, and the reason the United States is going to run out of money by October 18th is because in the United States, there's only a certain amount of money that we can spend as a nation, and there's a certain amount of debt that we can get into. And the problem is that once we reach a debt ceiling, it's a debt ceiling set in by law, by Congress, we can no longer spend any money above that debt ceiling. And the problem is we're going to reach that debt ceiling by October 18th. Now, the reality is we've already reached the debt ceiling. We reached it back in August, but the United States does have a large amount of cash reserves that we keep on hand. And unfortunately, we have exhausted those cash reserves and we will be completely out of money by October 18th. Now, here's the thing. All Congress has to do is they have to go in and they have to raise the debt ceiling. They basically have to pass a law that increases the debt limit by a certain amount. And the problem is right now, in the Congress, we have a large Democratic majority, and they pretty easily passed a bill to increase the debt limit. The problem is in the Senate, we are evenly split between 50% Democrat and 50% Republican. Now, the break-even vote, that is, if we get 50 votes one way and 50 votes another way, the break-even vote is actually a Democrat. And so in the United States, basically, the Democrats have to agree upon a certain law to actually pass. Now, the problem is in the Senate, we don't have a simple majority vote. In the Senate, bills have to pass by a 60% majority. And the problem is with Democrats only making up 50% of the Senate right now, all Republicans have to do is block the bill and it's not going to go through. And so basically, we cannot get a debt limit bill passed at this time. Now, there are some ways around this, and one of those ways involves a very complicated process in which the Democrats can work together between the Congress and the Senate to do what's called a reconciliation process. And it's really complicated, but basically it allows the Senate to pass a bill by a majority vote of just 50%. The problem is this reconciliation process will take at a minimum 15 days. And we are only 20 days away from the United States running out of money. And so the other big problem is this. It's not just the US running out of money. The other problem is that we have a spending bill, and if that doesn't get passed, then the government in the United States is going to shut down on Friday. At the end of this month, which is Thursday, we have to have this bill passed. And if we don't, the U.S. federal government will shut down. Now, obviously, there are certain people like the military and our congressmen that have to go to work, but they're basically going to be working for free. They will not get paid. They will not get paychecks. Also, money's not going to go to states, and it's going to affect a lot of states as well. Now, the last time this happened was years ago, and when it occurred, the stock market absolutely tanked. So the question is, will the government shut down on Friday? Well, here's the thing. As it stands currently, the Congress and Senate cannot get this debt limit bill passed on their own. It's just not going to happen. So they're going to have to resort to this reconciliation process, which is going to take a minimum of 15 days. Now, being that it's going to take 15 days, that's going to put us till about October 13th if they get started on it on Wednesday. And I don't think they will. I think they're going to wait till probably Friday. They're going to wait till the last possible minute to get started on it. And the problem is that come Friday, the government's going to shut down. So the government's going to be shut down for a good 2 or 3 weeks. And the last time that happened, the stock market crashed. And so all signs point to right now that the Congress simply cannot get this debt limit bill passed by Friday. And it just looks like what's going to end up happening is that Congress or the federal government's going to shut down, and we are going to get this close to that deadline of the US running out of money. We might even run out of money, who knows? But as we get really close, the US credit rating is going to get decreased. Interest rates are going to skyrocket. It's going to be terrible. And this will most likely lead to a major stock market crash if it occurs. And the problem is right now, there's a 95% chance that this is going to occur. And so it's looking really, really bad for the markets. So where do I see the markets going? Well, as you know, if you follow me on Twitter or Facebook, I actually bought call options. So why in the world would I buy call options if I think there's a 95% chance that we're going to get not just a major market correction, but possibly even a market crash? And the reason is this. It's really simple. It's purely technical. It's a one-day trade. The options expire tomorrow, and it's purely technical. We hit the 100-day EMA on the SPY and the QQQ, which are S&P 500 and NASDAQ ETFs, and we didn't go below it. To me, that's a strong level of support, and I think we're going to have a bounce off of those levels on Wednesday before continuing to drop on Thursday, Friday, and into next week. And so that's why I bought the call options. It's purely a technical play. Right now, the US futures are up about 0.4 to 0.5%. And so it looks like that play is going to work out and actually make some money. But we'll have to see. I mean, a lot can change between now and market open. But I do plan on closing those positions out on Wednesday and then converting those to puts for the rest of this week and into the next couple of weeks. So that's what I think is going to happen. It's really bad news. It's terrible. And unfortunately, it's looking even worse than I predicted. I thought we were going to get a correction of 10 to 20%. And right now, everything is lining up to be even worse than that. It could be terrible. We could see the stock market easily go down 20% from here. And so it's really not a good situation. So keep your eyes out on the news coming out of the United States. Especially keep your eyes out on news that is coming out of Congress and Senate as far as U.S. politics are concerned. Because if they can't get this thing fixed, and right now it doesn't look like you're going to be able to, the U.S. stock markets could be facing a major market correction and possibly even a market crash. And finally, we have the infrastructure bill that was supposed to get voted on and passed on Thursday of this week. But now it looks like that might not happen because some Democrats are saying they don't want to vote on the bill on Thursday. They want to wait until they can also include the much larger $3.5 trillion poverty spending bill. And it's looking now like the infrastructure bill isn't even going to get passed on Thursday either. So it's just not looking good. It's just a ton of bad news right now in the US. All right, I told you that there were a couple of stocks that were actually up today, so let's get into those. For those of you guys who are new to this channel, my name is Stock Curry. I used to work as an analyst for some large investment banks, and now I analyze stock picks on YouTube. Every day, I spend hours and hours and hours watching YouTube videos from the top YouTubers, and then I consolidate all of their stock picks and I put them together into a single video. I give you both the cliff notes on their stock picks as well as my analysis on their stock picks. Now, if anything I talk about today piques your interest, make sure you listen to who I say talked about that stock and then go watch their video to get the full details on what they said. Now, all I ask for putting all of this together for you guys is that you hit that like button, subscribe, and follow the page so that you can get notified when I release my next video. In fact, I'll give you 5 seconds to do that right now. All right, before we get into today's stock picks, I just want to remind you that I am not a financial advisor. Nothing I talk about today is a recommendation to buy, sell, or hold. These are just my opinions, which may or may not be accurate. Please do your own research before investing in any asset. If you're wondering what you're looking at right now, this is the Webull desktop app. Webull is the app that I use for my trading, and it is also the app that I use in all of my videos. If you'd like to get 2 free stocks worth up to $2,300, you can sign up for Webull using my link in the description below. When you sign up using my link in the description below and deposit just $100, Webull is going to send you 2 free stocks worth up to $2,300. All right, let's get into today's stock picks. First up is CHPT. This is ChargePoint. They're the largest charging station company in North America with more than 70% of the total market share. They are also starting to expand globally. Larry Jones let us know that CHPT was up over 1% on Tuesday, despite the overall market dropping significantly. CHPT is rising on hopes that they will benefit from the infrastructure bill the Democrats said they would pass this week. Next up is DKNG. This is an online sports betting company. Stockmo said he expects DKNG to drop down into the mid-40s. He's waiting for DKNG to announce some method for paying for their most recent acquisition, most likely a share offering. Once that happens and the stock drops further, Stockmo expects DKNG to start rising after that. Technically, DKNG is quite bearish right now, but it's not yet showing any signs of bottoming out. So I would stay away from DKNG until it bottoms out and starts showing some signs of rebounding. Next up is F. This is Ford. Larry Jones let us know that F was up today after they announced that they were building 3 major EV battery factories and an auto assembly plant by 2025. The new plant will be used for the manufacturing of Ford's new electric F-150 pickup truck. Technically, F looks very bullish right now, which is impressive considering that we are most likely in the middle of a correction. And next up is LCID. This is Lucid Group. They're an American EV manufacturer. Stockmo talked about how even though LCID was down over 5% during the day due to the overall market drop, it was up over 7% after hours. Jeremy with Financial Education, Stockmo, myself, and others have all been saying that small cap and high growth stocks will be the winners during a market correction. That's because it's the large cap stocks that are overvalued and dropping, and it's also the large cap stocks that control the indices. For the most part, we've seen small caps hold up fairly well, and most people think small caps are going to recover the fastest after this correction is over. Now, regarding LCID specifically, the reason it was up over 7% after hours is because after the closing bell, LCID announced that they had started production of their Lucid Air at their assembly facility in Arizona. They also announced that deliveries will start at the end of October. Obviously, manufacturing vehicles is the first step in getting deliveries. So the fact that their production facility is online is very good news for LCID. And next up is MGM. This is MGM Resorts International. Stockmo let us know that MGM has been running up because they are acquiring the operations of the Cosmopolitan in Las Vegas. So MGM is expanding while other casino stocks like Wynn Resorts, ticker symbol WYNN, and Las Vegas Sands, ticker symbol LVS, are dropping on bad news coming out of China. If you're looking to add a brick and mortar casino stock to your portfolio, MGM is probably the best one to go with. And last up is RSI. This is Rush Street Interactive, and they're a gambling company. Stockmo said you might want to take some profit on RSI. He reiterated his $20 to $21 price targets. RSI ran up on rumors of a buyout, and now Stockmo does not think RSI has too much more room to run up. On the downside though, Stockmo said RSI could drop back down to around $15. So as I said last week, RSI has a lot more downside potential than upside potential at this point. I would rate RSI a sell, and it sounds like Stockmo would agree with me. Alright, I hope you enjoyed this video and got a lot out of it. Comment down below how far down you think the stock market is going to go. And if you're looking for a broker to trade with, you can sign up for Webull using my link in the description below. When you sign up for Webull using my link in the description below and deposit just $100, Webull's going to send you 2 free stocks worth up to $2,300. Now, if you're not a US resident or if you're looking to trade OTC penny stocks, then I recommend Interactive Brokers. Interactive Brokers is a great trading platform. They have highly discounted trading throughout the world. Trades start at just $1 US, $1 Canadian, or 4 euros, depending upon where you live. And both Webull and Interactive Brokers offer the full pre-market and after-hours trading from 4 a.m. until 8 p.m. Eastern Time. Now, I do want to remind you that I have material connections with both Webull and Interactive Brokers, so whenever you sign up for either one of those, not only are you getting a great broker to trade with, you're also helping me to continue to produce these great videos for you. Now, finally, I want to remind you to hit that like button, subscribe, and follow the page if you haven't already. I hope you have a lot of success trading, and I will see you tomorrow.